Did Micron just tank the semiconductor market? After the company reported earnings, we can see big players like Nvidia and AMD were down over 7%. But how bad were earnings? And is this bad news for the semiconductor market? Let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
First, for those unfamiliar with Micron, this is a company that develops memory, which is pretty much used in every product today, from data centers, computer, TVs, tablets, cars, laptops, phones, cameras, graphics cards, robots, smart sensors, and the list goes on and on. So Micron has a great understanding of the tech market. Unfortunately, with the diversification also comes high risk, especially during times like now when we are seeing companies doing inventory correction. In its recent quarter, revenue was down 39% quarter over quarter and 47% year over year, sitting at $4.1 billion. The main culprit is the massive decline in bit shipments. DRAM bit shipments are down mid-20% quarter over quarter. Also, a vast decrease in average selling price as there is too much supply that the prices have tanked. Luckily for investors, Micron has a plan. First, it will reduce its capital expenditure for the fiscal year of 2023 and 2024, mainly on wafer fabrication equipment. For example, wafer fabrication equipment will be roughly 50% less in fiscal year 2023 versus 2022. This will cause pain for companies that manufacture memory equipment like Lam Research. The company is also reducing the amount of wafer creation. It plans to also reduce costs by laying off roughly 10% of the workforce and cutting top executive pay. Finally, it is slowing down its process tech transition. Before we go any further, if you are enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you are here, it means you're a semiconductor investor, and I have an amazing weekly podcast with a great host, great topics, link above or on the pinned comments. The perk of being in all these markets is that Micron can provide great highlights and inform investors. For example, the data center demand in 2023 is expected to grow, but at a much lower than historical trend due to inventory correction. They do expect meaningful growth in the second half of calendar year of 2023. Now in the PC market, the forecast is a lot weaker, right? Calendar year of 2022 saw a decline in the high teens. And for calendar year 2023, the decline is expected to continue in the low to mid single digits. The graphic market is expected to outpace the broader market in calendar year of 2023, so that's pretty great news for the overall graphics company. Auto revenue grew 30%, and they do expect robust growth in the fiscal year of 2023 with the ramp of next-gen infotainment. The industrial market continues to soften, and this is something I wasn't expecting, but Micron expects volumes to recover in the second half of fiscal year of 2023. Finally, the mobile market, the calendar year of 2022, expects a decline in 10% year over year and flattish or small growth in the calendar year of 2023. At the moment, it does seem like a rocky start for the semiconductor market, especially in the first half of calendar year 2023, but there might be some light at the end of the tunnel coming at the second half. Now let's take a closer look at financials and guidance. For fiscal quarter 2 of 2023, the company expects roughly $3.8 billion. And unfortunately, we can see a huge drop in gross margins to roughly 8.5%. A closer look at historical trends, we can see fiscal quarter 1 of 2022 revenue was $7.7 billion. Remember, this quarter was $4 billion, and next quarter they expect $3.8. We can see gross margins have also dropped. Previously in last year, it was sitting in the high 40%. Now we are expecting that to drop down to the low single digits. While the company is positive in cash flow from operations, roughly $1 billion this quarter, after subtracting its capital expenditures, free cash flow is negative $1.5 billion. Regardless, the company is making sure to buy back shares, roughly $425 million this quarter. A closer look shows that the company has increased its debt due to the uncertain macroeconomic environment. It has chosen to build up its liquidity. On the bright side, the company has roughly $10.5 billion in cash and short-term investments and roughly $10 billion in long-term debt, so it can definitely withstand a few quarters of negative cash flow from operations. Finally, during the Q&A sessions, two things stood out the most. First, management mentioned that inventories with data centers and cloud customers are higher than initially thought, and inventory adjustments have begun. And that's why we're seeing more of a slower growth in the data center market. The second thing is right now Micron is reducing its output to help ease the supply and correct pricing. But there are other players in this space, and if they keep pumping out products, then it might prolong the recovery for the memory market. I do want to say, right, the overall stock market is more forward looking. So while prices have declined, I do believe the market is already expecting a rough first half for Micron. Obviously, the volatility can continue and prices can go on, but for me, I want to say for Micron, maybe more of a short-term bear, but in the long term of things, I am more of a bull. At the moment, I don't have any shares of Micron, but if I was forced to buy some, I wouldn't mind purchasing at these levels. Let me know your thoughts on the comments below. Do you think Micron is dead money right now, or do you think a lot has been priced in?